Good morning, everyone. Thanks for coming shortly after the party. I would say that tokenization is very intuitive. On the one hand, it makes a lot of sense to put assets on chain to make the process smoother, faster, trustless, etc. On the other hand, we see that the road to implementation is bumpy at points, and we will get into these bumps and see exactly how it goes. To start, I would like to put a Slido just to get a sense of where you, the audience, is vis-a-vis tokenization. I don't know if you can see it, if the screen is big enough. What I'm asking you is to scan for a minute the code and answer while we're here and while the speakers present themselves on how ready is your firm to engage with tokenized assets today. We intentionally framed it as engage because we have here probably brokers, providers, even PSPs could somehow be relevant. So engage is a broad church. But let's see from your understanding of your operations today where you're at so we can know where to begin from. And while we do that, I would like our speakers to present yourselves and say who you are, what you do, and how you're involved roughly with tokenized assets. You can go on.
Yeah, thank you. Hi guys, John, I have to say this is a very nice panel. Thank you for inviting us.
You haven't even started. Wait, let's see.
Yeah. I mean, the subject is quite interesting, I think.
So far, so good.
We can see from the attendance that it's really interesting. So for those who don't know me, I'm Luis. I'm the VP of Capital Markets for Crypto.com. Crypto.com is a digital platform that provides access to our users to digital finance, generally from crypto, payments, and financial services. We have more than 150 million users worldwide. We've recently got into tokenization. We provide access to our users to tokenized equities, and we are ready to integrate blockchain in the real world assets.
Okay, good. We'll get to discuss what a real world asset is and what it could be in the next couple of years. Great. Stavros?
Hi, and thank you for this panel. I'm Stavros Vasiliadis. I'm currently the Chief Operation Officer and Director in Kraken company. We launched in Cyprus the MiFID II firm back in May 2025. And one of the products we offer is X-Stocks, which is, of course, very relevant to our discussion today.
Great.
I'm Oren Danziger. I'm currently the Managing Director for Finvasia Wealth. Involved also with a group has established BlockMaze, which is a new blockchain that basically wants to move away from this is only a technology, the tokenization, to move away to a firm that builds almost a layer zero, which is the trust side of tokenization.
Great. While you were speaking, the audience has cast its vote about where we are with tokenization, and I think we couldn't have asked for better conditions in the sense that interested but far from ready. So what this panel aims to do is to delve into the topics and the issues that will define this readiness. And perhaps we can start with lifting the hood from what actually happens when an asset is tokenized. We've read that Citi, for example, Citibank launched a depository for tokenized assets, granting access to private markets. So perhaps someone wants to take the torch and explain what actually happens once an asset is tokenized.
I can take this. I can speak about the case of BlackRock, the biggest fund manager in the world. So let's start with the definition of what tokenizing a real world asset is. Basically, you try to transfer ownership of a physical asset or a financial asset by tokenizing into parts and taking this part on the blockchain. Now, it might sound a bit easy as a concept, but it's not that easy. It has its complexities because, for example, in BlackRock's case, you start with an SPV. BlackRock has an SPV in BVI, which basically is the owner of the underlying assets. And the underlying assets basically are treasury bills, cash and repos. So basically it's a money market fund. Now, why you create an SPV is to protect those assets, to ring fence against creditors, so to be bankruptcy remote. After that, you need a custodian for these assets. So you need a regulated financial institution to hold these assets in custody in segregated accounts. In the case of BlackRock, for example, they use Bank of New York Mellon. And then you need a company that owns the technology to be able to have the permissions to issue the tokens, to burn the tokens when required, and to, via smart contracts, of course, be the party that transfers the tokens and puts on the ledger who is the owner of each token. In the case of BlackRock, this is securitized.
Okay. How many of you have understood everything and ready to go and tokenize? So there are a lot of moving parts, and as always in these topics, there are two conversations to be made. One of them is the broad market in tokenization, and the other is how specifically it can be applied in the retail investing space, the sort of people who walk this event. And that would be my next question. From what I'm gathering, there are two types, roughly, of tokenization for retail brokers or anyone offering retail investors exposure. One would be full ownership on-chain, they actually have an asset, and the other is having a token which represents the price of the equity itself, kind of like, or maybe not like how it goes with other assets. And we've just seen the case of SpaceX and the pre-IO that the technology worked, the rails worked, but there was not enough liquidity. There was not enough access to the assets. So perhaps you can go, whoever wants to take this, to explain the differences or the pros and cons for brokers in deciding which path to go. Should they go with full ownership, offering clients full ownership of the asset, or rather take themselves the risk or the exposure?
I think, so I'll move from the technology discussion. I think the technology discussion, we're at the phase where we almost past that point. I think tokenization as technology is there. It's going to happen. I think the next phase, it's going to be around what you just spoke about. It's going to be around ownership. It's going to be around trust. And it's going to be around the liquidity in the market. So when we say liquidity, say we are going to tokenize a certain real-world asset, a real estate in Dubai, and we discussed it. The ability to, to trade that on the secondary market is what people will look for, to do that 24/7. So the technology construction is important, but what I think the next phase will be, because at the end of the day, we're talking about almost a little present that we're wrapping it up beautifully, but no one knows if there's something inside that little box. And how we see that, backing that on a one-to-one, so the example of SpaceX and the fact that they were basically selling something that they don't have. Mm-hmm. They were giving people a treasure map and there's no treasure at the end of it. I think that will impact the market and will take it to a point that probably the first phase will be wrappers, because people like to speculate. It's the same, what we've seen with CFDs versus stocks. Some people would like to speculate and use the CFDs as a wrapper of the underlying asset. The others will take the ownership, the one-to-one. We see that on Blockmaze. We see that we need real asset, real issuers, backed one by one, one-to-one with the asset that we're trading. So it's a different approach. I think they're both going to live together, at least for some time, until people will kind of decide.
But is it something that's important for the end client, for the retail investor? All of you have various degrees, let's say, of the connection to retail clients, or at least your companies. So these, I wouldn't say minutiae, but these differences you mentioned, are they important to them? No, I want to be the owner of this, or I just want to speculate the price?
I think it is in the same way you see now that when you go, and most of the brokers now, I know Crypto.com and Crack, I use them, and they both offer, they will offer derivatives and they will offer shares. And those two have their own markets. Yes, they can cross-sell that, but they both live together. So I don't think that you end up with one only, but I think long-term people will prefer having ownership, full ownership, especially when it comes to real assets, real-world assets like, we're looking on collectibles, on real estate, on private market companies. So these things, I think people would like to own those.
Yeah. I tend to agree with Oren. The end client wants actual ownership. The token, if we see it from a legal perspective, is a representation of the asset. So the easiest way for the client is to just purchase the token rather than going to signing contracts to buy a fraction of a building. So once everything is on chain, they will be able to access it quite faster and more efficient. So the end client actually wants the ownership of that asset.
Stavros, any opinions on
On
that?
the other hand, I mean, most of, especially in the retail base, I think most of people are more interested on the exposure on the underlying asset. So some people maybe don't even know the difference between owning the asset, with all due respect to
Yes.
the retail client base, but this is true for a number of retail clients. So what they chase is the exposure to the appreciation or not of the price, and not so much on owning the asset. So the end result for them is to basically be able to invest in something that could potentially give them profit. Yes. So if this is wrapped as owning the asset or just having exposure to the asset, I don't think it's crucial for the retail client, but it is crucial for the institutional.
And if you look at the rise of perpetuals, of perps, that could also at least support this case. So we've brought up several things to unpack here, and I'll start with the toughest one, I think, which is regulation. We talked about the types of asset that may or may not fall under the tokenized world. How do you look at regulation? If I started saying I'm like a broker now interested in tokenizing, should I be looking, let's say I have multi-jurisdiction entities in my group, should I be looking at MiCA, EMI, payments regulation, MiFID? How these moving parts that puts the maze in the block maze can actually work together?
Well, MiCA managed to regulate digital assets that do not fall under the financial instruments or transferable securities. MiFID, for example, Kraken does X stocks, which fall under the transferable securities, so it remains under the spectrum of MiFID. Therefore, what we need to see is that the regulation needs to evolve. We can see that happening now with the DLT regime, the pilot regime that is enhancing. The European Central Bank is issuing a digital euro. The CSDR regulation is changing, so the settlements will be done on blockchain. So it's not a matter of the regulation regulates a specific asset rather than integrating MiCA, MiFID all together.
So it doesn't matter, even if I tokenize in order to offer oil or stocks and have nothing to do with crypto in my homepage, I'm still being considered as an owner or participant in a digital assets space.
As far as the token represents a financial instrument under MiFID, then you don't need MiCA. You will need to be compliant with the MiFID regulation. So MiCA will regulate assets that do not fall under that instrument. But the way that tokenization is evolving is that to represent actual underlyings, therefore will fall under the existing framework that is being developed right now to represent blockchain deals as well.
Okay, that's quite exhaustive. Any further
I agree
additions?
with Luis. I mean, I believe there is a confusion on which regulation owns tokenized securities. So as Luis said, they fall, at least in Europe, under MiFID II. MiCA owns only the tokens that do not fall under MiFID II. But when you speak about real-world asset tokenization, their nature is basically resembling transferable security under MiFID. So while MiCA was drafted to regulate crypto assets, although a tokenized security is a crypto asset itself, the regulation behind it that you need to abide by is MiFID II.
Okay. What do you see, Oren, from like Finvasia Group has many arms and activities across the globe, so maybe some insight into other regions if...
We're a multi-jurisdiction licensing group, but for me I would break down maybe the jurisdiction to the US, and I'll put it there because they're doing obviously the Genius Act with the stablecoin, the Clarity Act now, the pro-crypto. They're going to win this battle, and it's a bit of a shame because then if you look on the hyper-growth areas, so take Dubai or the UAE, again, they're very advanced in the way they look at crypto. And unfortunately, we're sitting in Cyprus, Europe. I think Europe is dropping the ball a bit with that because you, like the two guys said, you have MiCA, MiFID, and now if you need to do, if you want to do, you need an EMI as well to kind of cover the suite of products and services you have. Yes, at Blockmaze we have everything and we can offer that, but, and don't get me wrong, I'm a big believer in regulation. Regulation, it's a bit like our parents. They're annoying, but we need them. So
and they give you fines.
Yeah. So I think, and my concern is that in the same way that to some extent Europe lost the internet battles during the 2000s, again, we're at the point where we need to move fast. And in Europe, UK, we're still at the sandbox level in the UK. So this is my concern. I will break it down. US definitely is going to be advanced, especially with this administration.
So are there any specific requirements or pre-requirements that brokers are unaware of that they need to check these boxes before coming to any of you and be able to start tokenizing their offering tokenized assets?
If we are talking about Europe, I think the most important thing that they need to consider is the prospectus regulation, which you need another entity to issue to mint the token and get the prospectus up and running to be approved by the regulators. Based
where?
In Europe.
But so this entity would be falling under which jurisdiction here? Like Okay.
Yeah. It doesn't matter wherever in Europe. That's another problem. But I think, as Oren said, the US is a pioneer in that, and it will be much easier for anyone to want to tokenize any securities to do it from the US.
Got it. Okay, so regulation is one thing, and we started talking about the end client and what they want. And I think when discussing tokenized assets, two clear benefits emerge. The first and more immediate perhaps is extended trading hours or extended access to trading 24/5, 24/7. And the other, which might be considered as the next wave, is those real world assets. Mainly exposure to the next wave of assets. We talked a lot about real estate, and if regulation was the segue, do you see what sort of amendments or requirements would brokers have to go through in order to trade these assets, the liquid ones? Can it be part of their offering? Do you see real estate, ships, I've heard, being on a broker's platform, like as naturally as stocks?
I believe yes. I mean, what you need to do is tick the boxes of the regulator, depending on which regime you fall under. So for example, if you want to tokenize real estate, let's get a skyscraper, for example, which it might be science fiction. If you talk about it, I don't know, 5 years ago, you tokenize it, it's basically, the tokens are transferable securities, so it falls under MiFID II. So you need to tick the boxes of the regulator. You need to do the same things as you do with when you offer a stock, for example. So you need to go through the suitability, the appropriateness test, all the information that you need to collect about the client, the KYC. So brokers still have, a role to play in a future tokenized environment. Because I think some people believe that brokers will not be, they will have no role.
Yeah, that's a fair point. The whole point of a broker to mediate between two parties supposedly is redundant, or not?
Yeah, but it's not, because you need to keep the client relationships and the offering with the broker.
It's an interesting way that Stavros is describing it, but I also believe that it will be a two-leg. Governments will issue tokens, let's say for the land registry, instead of getting your certificate of ownership, you will get your token. And then if you want to sell it, then you will go to the broker and say, I want to sell it, and then you will have the transaction done by a broker, but it will be used both from a governmental perspective or any other institutions just to issue a token, and then you can put it in a brokerage in order for that to be traded or exchanged.
So a real estate broker and a retail broker may look a bit the same if I follow the logic here.
Depending on what you want to do with the token.
Mm-hmm. It's a good thing we have a reality on event for real estate. It will make things easier to convert. Great, but I want to double down on this point. Is this the sort of demand that you see from clients? Is this a promise? We said in our pre-session call that retail clients are being squeezed by anything from prop trading, prediction markets even, and maybe tokenization can open up new asset classes that are not currently on offer. And my question is, how useful would it be? Do you see tokenized assets opening up diversification? Another way to ask it is, what sort of real-world assets will be available, do you see or act to make available for retail investors?
For me, I think the question should look, because if you look, I don't think that the future will be won by whoever creates the most assets. I think the one who's going to own the part of the market is the one who creates the most trust. So when you are looking at tokenizing a certain asset, you want to make sure that the governance framework is there, the ownership, but also the liquidity. At the end of the day, our retail clients will come in, they'll come to Blockmaze, and they will expect that they'll be able to trade 24/7. So the point of almost what we're looking at is create an ecosystem that allows retail clients, allows brokers to trade with or trade assets that has enough liquidity. I think it's not in the next probably 12 to 24 months. Let's be open about it. But in 10, 15 years, in the same way we see now the new generation coming in and talk about stocks and talk about investments, I think they will want to have diversification around different assets. So when you look on real world assets, yes, the usual suspects are the treasury bills and the fixed income and gold backed. But if you go a step further, you look on real estate, and you mentioned ships, and we spoke yesterday with someone who does with airplanes. I think it will go that way because people are curious, people are a lot more educated than what we were 20, 30 years ago when we were looking to start investing. So for me, it's yes, you want to put on chain as much asset as possible, but you want to tokenize trust. You want to tokenize ownership. You want to make sure that you can provide your client with a liquid asset that they can trade.
Sounds promising.
Yeah. So the answer to the question, everything will be tokenized.
Okay. Okay, the short answer is everything.
Yes. And I agree with Oren that I think the market will start first with the easier stuff that it's already happening. You see BlackRock, for example, tokenizing money market funds. So now the biggest markets are money market funds on tokenization, followed by credit, corporate bonds. But it's really expanding very fast. So we started, I saw some data yesterday that in early 2025, we started with RWAs of around 5 billion. And now 1.5 years later, we are close to 35 billion, while the whole market of tokenization, excluding stable coins, is projected to go up to 16 trillion by 2030. So 16 trillion, you understand, is comparable with the assets under management of BlackRock and JP Morgan together. So you understand we are not in a premature phase. We are not in experimental phase. We are kind of in the middle between experimental phase and total industrialization.
Great. We're moving ahead, not towards the end, but towards the beginning of the end of the panel. And one thing I wanted to establish is benefits. I mean, we talked a lot about the future, about challenges, about how regulators may or may not view it. What is the main benefit that you see achieved so far, already locked in by tokenization for retail investor platforms or brokers? It could be your own, it could be your clients, your peers, things you see in the market. The audience here said that interested, but far from ready. So let's incentivize them even further to be readier and share, again, benefits and achievements already done by tokenization. If you have in mind anything like that.
For me, the biggest one, and I think it's a bit, once you see stable coin, you can't go back. It's a bit red pill, blue pill with the metrics. Once you see a transaction going on a Sunday afternoon, no fees, going directly, for me, stablecoin changed the way things are.
In our world, for brokers accepting stablecoins,
it's a settlement layer. It's a collateral layer. So definitely, all brokers that are sitting, especially outside of Europe, stablecoin are definitely playing a key role. So for me, if I had to choose what's currently working, stablecoin.
In our specific case, if I want to speak for Kraken, I think the biggest achievement is you have a client, okay, for now it's outside Europe and the US, but they can trade 24/7 on a weekend, okay, with near instant settlement, and they can use that X-stock, the tokenized asset, as collateral for other decentralized applications. So if you go 2 years back, no one could predict that.
Yes. Right. If you compare that to the paperwork involved in calling your bank and waiting for the wire, and so on, it's quite astounding.
I think it's an issue that traditional finance was discussing and was trying to solve for decades, but we were not able to solve. And looking forward outside Kraken and speaking in general, there are a couple of great advantages of using that technology, the tokenization of real-world assets. One big advantage for the masses is that I think that tokenization will democratize the market. So it will give easier access to retail investors, to people that are not high net worth. So, for example, if you took a skyscraper now, you understand how illiquid that asset is, and that you cannot really split it into parts, into fractions, where any people could have a bit of ownership. Same goes with a very famous painting, for example, painting of Picasso. So can I buy a painting of Picasso? No, I can't. But I could buy a piece of it in the future if I want it. Maybe 1 million of that painting, but I could, participate in the appreciation of that rare asset. So this is a very important advantage looking forward.
I think Stavros touched the right. It's accessibility and fractionalization of real-world assets. That's the key function of the tokenization.
And that's all forthcoming. And to what extent do you see it happening in the next 12 months? We started saying that in the next 12 months we won't see the big gun of real estate tokenization. But when we sit here in a similar panel at the IF Expo 27, do you foresee bigger change, bigger willingness from brokers to engage? Will they still say interested but far from ready?
I think Oren said it before, liquidity. You will see so much liquidity in tokenization that will make everyone want to be part of that.
Yeah, and the SpaceX is really an extreme case because it is the most sought after stock and not every asset will behave this way. So I'm not discouraged by this thing. I think if anything, it's a testament to the fact that the technology works and it survived, let's say, the toughest case potentially. So that's a positive outcome. How about yourselves in 12 months from now? Would these guys be more ready?
Sorry. I think the data is there. I mean, the growth, as I said earlier, is exponential already. And when you see giants of the traditional finance like BlackRock and JP Morgan already tokenizing things, then you understand that there is already a fundamental shift in the market. So if those guys are interested, if those guys are doing it, there is no way it's not going to progress.
I just wanted to comment that while you spoke, the metrics have changed and someone shifted from interested but far from ready to exploring actively. So perhaps you were exploring actively on the mobile during the conversation, but this panel has already helped to some extent. Yes, Oren.
I would look at it, two things. Brokers, I know brokers very well. They are super adaptable. So even if 40% are saying now that they are interested but far from ready, they have a really great dynamic of adapting to what's going on. We've seen that throughout the years. Brokers, it will be slowly, and then suddenly. So 40%, I'm not worried. These guys are super flexible when it comes to adapting to the market. The other thing is they have a really good sense of what's working and what's not. And I think at the moment, when you look on the infrastructure, when you look on what's going on, when you look on tokenization, it's a bit like it's like a Lego set that you glue together. It doesn't fit yet. And I think once you have those providers that kind of give you the full set, A to Z, this is it, you can, switch on, do the integration, switch on. That's what we're aiming at BlockMaze. I think you'll see that the adoption or the people are taking on the tokenization BI. And I think we're not far from there. It's just a question of starting the conversations.
Okay, we have some time for questions for the providers of, 3 types of providers of glue that should make it work more smoothly. And while you think of questions and the mic is passing, I will ask you another question. Supposedly. We started with how ready you are today, and now after hearing this, perhaps you can comment on when should your firm start engaging with tokenized assets. So you heard where it's heading, you got a glimpse to a tokenized future. So while you scan and answer, if anyone has any question for the esteemed group of speakers, that would be a good time.
If I may add
Sure.
to what Oren was saying earlier, brokers like the plug-and-play solutions. So I think companies like us on the panel will prove that this can work, and you will see brokers' interest in the next few months will increase, and will reach out to companies like us in order for them to be able to provide. For now, it's just the exploring phase, but because there will be the evidence that it works, you will see the interest skyrocketing in the next few months.
I agree. I tend to agree. Any questions? Oh, okay, someone here is raising.
Yeah, I have a question.
Okay, without the mic even.
Well,
I can hear you.
So my name is Gabriela. I'm a compliance officer in a crypto service provider in Cyprus. Thank you. And basically now, while waiting for Mika, we are having an issue with stable coins. Like we need to find EMI, which is able to onboard us as an agent. And I see this as the most challenging part of the integration you guys was talking. And my question is that, do you know maybe better than us when this issue is going to be solved?
So you applied for Mika?
Yeah, we applied for Mika and we have the whole integration and the whole setup except the PSD2 or 3. I don't know which is going to fall in the end.
If I may say that, you have to do your research on EMIs that accept this kind of.
Actually,
so not only in Cyprus, but you should explore the European.
We did that.
PSPs.
The only thing is that even the regulator couldn't give us specific points in an agreement.
Nobody can give you the specific point of agreement. This is a research that needs to be done by your firm.
Okay.
But I can tell you that there are EMIs out there that are willing to give you this access.
Okay, so I'm happy that I basically was able to confirm the issue we are having and I know that a lot of companies are facing. Thank you. I will take the opportunity to say thank you for this.
Thank you.
Speaker hall, it was amazing. I love the subject personally and I've learned a lot of things.
I'm surprised that in the expo you haven't found anyone in those booths.
The problem with the expo is that there's not enough PSPs here. That's the issue.
Yeah, we did find some. However, they are not sure that they can onboard us even. So basically, we are facing this issue right now, and I hope that soon is going to be clarified, so we can make business.
Wonderful.
I can hear that.
Do we have any? Okay, I see some hands being raised.
First of all, congrats to the amazing panel that we had today. Thank you for your insights. During your discussion, you have slightly touched upon the tokenization of everyday assets, which I found kind of fascinating. So my question is actually, since you seem to believe that everything's going to be tokenized in the future, what regulatory framework will we need in the future in order to make sure that there is a safe and scalable tokenization in the next, let's say, 5 years?
For me, looking on what we're going to tokenize, it's super important to have verification of the issuer side, verification of the asset side. So we'll have to create, it's probably going to be an embedded compliance within the blockchain you're using, which will then take through the whole issuing side, making sure that verification is done, AML, KYC. It will sit, for me, I think it makes sense, it will sit on chain as well. I don't think that that regulation is in place now. Yes, we know that the regulator is kind of lagging all the time, 24, 36 months behind. But the way we see it at Blockmaze is that the compliance side of things, the governance side of things will sit within the blockchain layer. So almost like a layer 0 that will sit there and make sure that what we or brokers are putting forward to the retail clients is not just a treasure map. It has something at the end that allows them to own something.
Yeah, and I think it will also reflect the utility of the token. Based on the utility of the token, the regulation will evolve to essentially cover that utility of the token.
Yeah, and unfortunately, from what I see right now, there will be fragmentation. So we will not, at least at the start, we will not have a common, regulatory framework around the world. So to give you an example, in our case, we have Xstocks, our tokenized product, being recognized as a transferable security under MiFID II under CISEC, while you have the Bermuda regulator to treat it as a crypto asset. So you understand that, these are problems that we will face. The US, even if it's the biggest financial center in the world, they still need to figure out how to treat tokenized securities. That's the reason we are not offering Xstocks to the US right now. So you understand there are lots of issues to overcome before we get into tokenizing everything on Earth.
Okay, unless we have one more pressing question, I think we're done. Do we have any last? No, okay, Juice says there's no time for that. So thank you very much for coming. Thank you for hearing. I think we've learned a lot. We've gained a lot of insight. And I started by saying that tokenization is intuitive but hard to understand. I think we're in a better position already. So thank you very much.
Thank you.
Thank you so much. Pleasure.